We told ourselves, what is a better way of raising financing that adds leverage, that does not introduce maturity risk, that can be traded by retail investors, and we can issue more of. And as we were thinking about that very deeply, we realized that the best way to do that is to not use convertible debt anymore. And we designed STRK, which had many features of convertible debt. We did an IPO, and that was a big success. And all the investors that used to invest in our convertible debt moved into STRK. And then using that as the stepping stone, we did STRF, STRD, STRC, then STR, all with slightly different features. Sharpe ratio is considered to be the ultimate indicator of the risk-adjusted return of any financial asset. And it's the Holy Grail for a lot of portfolio managers and investors. So creating high Sharpe ratio with high liquidity is like the ultimate achievement in financial markets, and it's only possible because of Bitcoin and because of Strategy having so much Bitcoin and having such a liquid stock in MSTR as well. As STRC grows, Bitcoin grows, MSTR becomes attractive for MSTR, again Bitcoin grows, the capacity to issue STRC keeps increasing, and we issue more STRC, Bitcoin grows. It becomes very reflexive, like a flywheel. Everything keeps spinning up together. Thank you so much for having me, Aldona and David and Alberto. I think this is one of the most enjoyable podcasts I've ever recorded. So thank you for that. Thank you for the questions. And I've never been to Spain.
Welcome everyone to the brand new episode of MadBitcoin Postcard Business, the show that puts Bitcoin right at the center of the corporate strategy, treasury decisions, and capital markets innovation. Today is a very, very special edition. I'm thrilled to have not one, but two incredible co-hosts joining me, Alberto Mera, that you already know. He's a voice behind podcast sobre Bitcoin. This is the leading Spanish language Bitcoin podcast. And the other co-host is David Battaglia. He's a great Bitcoin educator who has traveled the world promoting Bitcoin, blockchain, sand money, principles for conferences, workshops, and so on. And now, our featured guest for this deep dive conversation, Chaitanya Jain. Chaitanya, how are you? Thank you so much for joining us.
I'm doing well. Thank you so much for having me. Excited to record this podcast with you and dive into all things related to Bitcoin treasury strategy and digital credit.
Wonderful. For those of you that don't know you yet, you are a Bitcoin strategy manager at the strategy itself. So it's a huge, huge honor to have you here today with us. We're going to go straight to the difficult questions, if you allow us. First, please, everyone is very amazed about all this financial engineering that you are building upon Bitcoin. If you could start with explaining us how you designed these 5 preferred instruments like stretch, stride, strike, strive, and ultimately stream, which is like very interesting, I think, for our European audience. Where did it all started? What is the complexity of those in comparison to the traditional financial instrument, whether there is any similarity or any differences? Please tell us about it a little bit more.
Sure. So all of this started in January of 2025. So close to 1 year, 2-3 months ago. That was when we launched our first digital credit instrument in the form of a preferred equity stock. That was Strike, STRK. And the reason we launched it is because we wanted to move away from the era of using convertible notes or convertible debt as our financing strategy, because for various reasons, we didn't like that strategy. The convertible debt was very illiquid, traded only by institutional investors. So price discovery was low. It was a slow process to launch each one. And we could not issue more convertible debt as in when we wanted to. We had to wait to run a whole process and issue it. And most importantly, it had a maturity risk because you need to repay the convertible debt in 5 years or 7 years if the stock price is not above the strike price. So it had all of these complications and all of these things we didn't like. So we told ourselves, what is a better way of raising financing that adds leverage, that does not introduce maturity risk, that can be traded by retail investors, and we can issue more of as and when we like instead of running new processes each time. And as we were thinking about that very deeply, we realized that the best way to do that is to not use convertible debt anymore, but use preferred equity, a hybrid between convertible debt and common equity. And preferred equity is senior to common equity and gets a fixed dividend typically. So then we designed STRK, which had many features of convertible debt. It was convertible to common equity, a specific conversion ratio, but there was no maturity. It was perpetual in nature, so perpetual preferred equity. And we launched that. We did an IPO, and that was a big success. And all the investors that used to invest in our convertible debt moved into STRK and led to big success for the IPO. And then using that as the stepping stone, we did STRF, STRD, STRC, then STRE, all with slightly different features as we were trying to cater to different parts of this credit market or fixed income market. What do people want? What do people like? How can we access different kinds of capital? And because we kept doing that, we discovered STRC, which we describe as our iPhone moment, because we realized that is the perfect instrument for most retail investors, most institutional investors, most corporate treasuries. And now a big focus is to make STRC the grand success of the company and grow that in terms of size, in terms of liquidity, and make that, the core part of our financing strategy. So happy to dive into any part of that, but that's how we reached to where we are today.
Thank you very much for that summary. I actually have to, thank you, I guess, because I mean this podcast and a lot of the content surrounding Bitcoin is about treasury companies that, of course, treasure Bitcoin, and you were the first one. So I guess, thank you, and also thank you for the innovation, because I mean you make so many things that is very interesting for us who are like creating content around it to find your products. So well done there. And in particular, I'm curious about the STRC product, which is the most interesting of all of them, because as you mentioned, the others have been more or less tried before, but STRC was somewhat different. So once you had launched STRD, STRF, and all the rest, what was your thinking to go and try STRC? Because you mentioned that convertible debt had issues with for a company like yours. That wanted to raise money. So, what were those issues that you found in these other preferreds that you wanted to fix with STRC?
Yeah, so I wouldn't necessarily call them issues, but we got investor feedback and we started realizing what part of the other instruments sometimes pushes away new investors. And the main thing was the price volatility of the other preferreds. So we did STRK that had the conversion option to MSTR and would have dilution in MSTR if the holders would convert. So we said, let's try one without the conversion option. So we had a fixed dividend rate of 10%, no conversion, and some senior governance rights, and that was STRF. Big success. We removed the governance rights, we removed the senior protections, and did something like a junk bond variant of it, like a more junior instrument called STRD. That was a big success, and that was larger than STRF, which was larger than STRK. And then, as we were talking about these instruments with retail investors, institutional investors, just high net worth individuals, big billionaires, Michael Saylor's friends, we started realizing that many people want something that doesn't have any volatility, because STRF, STRD, STRK all have some sensitivity to the price of Bitcoin, the price of MSTR, the interest rates in the market, is the Fed increasing rates, cutting rates, the credit worthiness of strategy. So it's tough for a retail investor to understand, how to price this. And if I buy it today, yes, I'll pick up this dividend rate for 6 months, 12 months, 18 months, but what will be the price of the instrument when I sell it 12 months later? It's like a long duration bond, like a corporate bond in some sense, a 10-year bond, 20-year bond. And you need to account for a lot of different things when you try to understand how much will I exit the instrument at. And a lot of people don't want that. They don't want price volatility. They don't want to take any kind of risk on their principal. So we said, how do we remove that volatility? How do we make the price stable? and all the other instruments had a fixed dividend rate. Strife and Stride were paying a 10% fixed dividend, and the price was variable. But we said, let's make the dividend variable so that the price can become stable. So that was the big innovation and the big invention of sorts. And a lot of it was using AI to brainstorm. And we said that if the price falls, then we increase the rate. And if the price goes up, we decrease the rate and we keep it stable at 100. And as soon as we do that, we end up creating an instrument that looks a lot more like something like a money market fund where, the principal stays stable and you pick up your coupon or interest or dividends, or like a bank account, savings or checking account, where again, if you put $100 in an account, it stays $100, but you earn your interest. And this is something similar where it's not perfectly stable at 100 every single second, but it's more or less stable. It has a tight price band and it's very liquid. It's listed on NASDAQ. You can enter in size, exit in size whenever you would want to, which is a very important part of it. And the more important part is that you can be reasonably certain that the price will be close to $100. So you don't need to take price risk in some sense. You can collect 11.5% dividend yield. It's paid monthly in dividend installments. And it's all tax deferred, which is also another very unique advantage. But the experience of doing the previous preferreds and getting investor feedback and using AI to brainstorm is what allowed us to create STRC. And as soon as we designed it, launched it, we knew right from then it's going to be a grand success. It took a while to season. Bitcoin price crashed. We had to establish a dividend reserve and we did many things. But now, finally 7-8 months later, we are seeing all of that culminate into really, really strong demand for STRC. So it's a big validation from the market that we are getting, especially in the last month.
Yes. Can I ask something?
Yes, please.
Yeah. Hi, CJ. Nice to meet you. I am more of a macro guy, right? All these new instruments are like, okay, something new for me. But if I understand correctly, in the current environment with the war and all the volatility in the market, it's very interesting to me to see that STRC is working like some kind of safe haven asset because we have a good Sharpe ratio and low volatility in this moment. Yesterday we saw, I don't know, gold crashing, silver crashing, all these type of assets that are like a safe haven, traditional safe havens, right? And my view is that maybe STRC is like working in this new, maybe not intended by MSTR by strategy doing this, but it's working like that. You don't think so? Maybe in the few months, markets will appreciate that component of stability and yield, and maybe many, I don't know, funds or whatever, retails start to see these instruments in this way. What do you think about that?
Yeah, I completely agree. And if you look at traditional investors that invest in different sort of macro assets like gold, silver, or even different asset classes or sectors, and they want to sometimes express a view in the market that something is overvalued, then they will try to short an asset and they will go short gold or short AI stocks or short the government bonds from a particular country. And the issue sometimes in shorting a particular sector or a particular asset is that, there's a famous quote, the market can stay irrational longer than you can stay solvent. So sometimes instead of shorting it, you don't go long, you don't go short, you instead just park your investments in cash and you just hold cash instead, because you don't think you want to go long a particular asset, it's too overvalued, a crash is coming, but you don't want to short it immediately either. You don't know where it's going to go. You don't want to be shorting it when there's still a lot of exuberance in the market. So then typically people just hold cash and they earn nothing on the cash, and they earn whatever the risk-free rate is, 3%, 4%, whatever the Federal Reserve is setting the risk-free rate at, whatever the short-term treasury bills is giving you as your income. But now with STRC, you have this really, really unique structural advantage as any hedge fund in the market, any public market investor in the market, where If you don't want to go long a particular sector, you don't want to go short a particular sector, you just want to step away from the market. And you can just hold STRC in your portfolio. You will make 11% and it will be tax deferred. It will all compound.
Yes.
And I think a lot of people will start expressing their view on different sectors and use stretch for that expression in their portfolio. So I don't know how much of that is happening already, but I think it will keep picking up and it will start, playing a different role in different people's portfolio, and it will play this kind of a role in a hedge fund portfolio.
Yeah. You think STRC it will prevail like the main source of Bitcoin buying for MicroStrategy this year, for example?
I think so. I think we've unlocked a lot of demand already. And especially in the first couple of weeks in March, we've seen $1.6 billion of capital flowing into STRC. And we've doubled the size of STRC from the IPO now from $2.5 billion to $5 billion. And because there is this inflection point in terms of awareness among institutional investors, retail investors, even corporate treasuries that are adding STRC to their balance sheet, we are going to see this demand keep ticking up. So I don't think it's unreasonable to imagine that for the remaining 9 months of 2026, we raise $1 billion, $2 billion, $3 billion every month, and it becomes the primary source of capital raising. We will obviously still use the MSTR common
Yes.
stock as well, and we will be a bit more opportunistic over there. We will use it for funding the dividends, and if the valuation expands, then we will lean on it. If the MNAV expands, we will lean on MSTR as well to raise capital, buy more Bitcoin. But that will be a bit more seasonal. It'll depend on the valuation. It'll depend on Bitcoin sentiment, MSTR sentiment. Whereas STRC will just keep going up linearly, I think. That demand is not going to be very sensitive to where is Bitcoin, what is strategy doing. It's just somewhat of a risk-off way of putting capital in, and it keeps sucking in capital from this fixed income world, which is massive. It's like $300 trillion of wealth across different fixed income instruments, which
Exactly.
earn very low yields or have very high risk. And capital will now flow from private credit into STRC, from mortgage-backed credit into STRC, from junk bonds into STRC. And that will keep picking up for 2026, 2027, 2028. I think STRC can go from being $5 billion to $50 billion to then, even $500 billion. There's no reason why this breaks or why this slows down anytime.
Yes, it's very interesting because I'm an investor in MSTR. One of the arguments of the bears, right, is like Sailor is diluting the stock. They have too much debt, even when the company have like for each dollar of debt, like a $5 of assets. So it's very interesting because that is like the main focus of the guys that are like bearing the stock all the time. Sailor is going to be liquidate all that stuff. I think STRC is like making a point here. Don't you think?
Yep, I fully agree. And what will happen is we will eventually phase out that convertible debt which currently exists on the balance sheet. It will all get equitized into MSTR. And then we will just have a preferred equity and common equity model. STRC will be the largest preferred equity, and all the preferred equity will be perpetual in nature. So there will not be any refinancing risk. You literally cannot be forced to liquidate your Bitcoin. And there is no liquidation risk. There is no Bitcoin posted as collateral. There is no margin call. There are no price levels where you start facing any issue. Like Bitcoin can crash 90% and we will be fine. And we will continue to pay the dividends on all the preferreds. The risk will be in MSTR. MSTR, the common equity, is the one that bears all the risk and then gets the exposure to all the upside. Because if Bitcoin goes up 5x, Bitcoin goes up 10x, STRC is still just getting 11.5%. All the other preferreds are getting their fixed return. All the extra upside comes to MSTR. So the whole business model rests on MSTR being the shock absorber and being the thing that
Yes.
expands. And there is no bankruptcy risk. There is no liquidation risk. And we can, in theory, we have the option to suspend the dividends as well. But we would never want to do that because then that breaks the trust in the market and
Of course.
that will collapse the entire business structure and business model. So we keep funding the dividends, we keep letting MSTR absorb everything, and we just keep doing this again and again, and we just scale it up from 5 billion to 500 billion.
Yes.
So it's very exciting.
And you think this move with STRC and all what you're saying maybe can move MSTR to the S&P 500, and most of the fears out there can be, going down in intensity in this moment, or you think it's maybe not going to happen?
So I think with time, I am confident that the S&P 500 will warm up to Bitcoin and Bitcoin Treasury companies and strategy. But unfortunately, it's a black box, and they have a closed door committee that makes decisions on what to do, what not to do. And we have no real influence as a company to persuade them to add ourselves to the index. So yes, STRC is good for the company and will grow the size of the company a lot faster. But I don't know if it necessarily changes the mind of the S&P 500 committee themselves. What needs to happen over there, more important than what we are doing with our capital structure, is to get international banking regulators and US banking regulators to start treating Bitcoin in a more constructive manner. Right now, the Basel norms, the international banking norms, puts a lot of risk weighting on Bitcoin, where it becomes basically marked down to zero on your balance sheet if you're a bank, or even if a rating agency, credit rating agency is evaluating the risk of a Bitcoin treasury company. They give you no weight, like credit for holding the Bitcoin. They just mark it down to zero in some sense. So those things need to change first. That will lead to more constructive adoption of Bitcoin. And then I think that will open the door for companies like Strategy to be added to the index. And then I think in the meantime, Bitcoin will keep doing its thing. Bitcoin doesn't care about regulators, or Bitcoin doesn't even care about strategy or Bitcoin treasury companies. Bitcoin will just keep growing. But it will be a good positive catalyst when those doors open up eventually.
David said he wanted to make one question, and he made four altogether.
I'm so sorry.
Okay, I have one question about limits, but I will let Aldona, because Aldona had like 11. So go Aldona.
I'm here. I wanted to deep dive a little bit more on what you mentioned about the volatility, because I think it was this week that Michael Saylor announced that the Sharpe ratio is like the highest on market. It's like more than 5, and the volatility is all-time low. It was like 1.5%. Yes, if I remember correctly. So could you like walk us through exactly what does that mean and how this mechanism works that is giving these numbers for this instrument? I think this is the first time in the market when we see these numbers.
Yep. So Sharpe ratio is considered to be the ultimate indicator of the risk adjusted return of any financial asset. And it's the holy grail for a lot of portfolio managers and investors to create higher Sharpe ratios for their portfolio, for their funds, or pick assets that have high Sharpe ratios. And Sharpe ratio itself is defined as the return in excess of the risk-free rate divided by the volatility of the instrument or the asset. So if STRC is giving an 11.5% yield, that's the return, and you subtract the 3.5, 3.7% risk-free rate, which is like the rate you get on US Treasury bills, then your numerator will be something like 8%, and you divide that by the volatility. And you can choose the volatility metric you want. And we rely on the last 30-day trailing volatility. So how volatile has the price been for 30 days? And what we've seen with Stretch is we launched it in July, and it took a while to season, and Bitcoin price crashed. So Stretch sometimes traded down from $100 to like 95, 93, and we were still growing awareness in the market, and people were worried that it may not work. And we put a USD reserve, put some cash on the balance sheet to have dividends on hand. And now, 7, 8 months later, it has stabilized and it's trading very close to the $100 par. And in the last 1 month, it's been very, very tight. And that's why that volatility number has come down, as you were saying, all the way to 2% or 1%. And our expectation is that it will remain very, very tight from now. Even if Bitcoin has wild swings, people have now gained a lot of confidence in how this works. And hence, it will not really trade down much and it will be tight. And it might trade down occasionally, but people will come in probably and buy it because they'll find that price arbitrage very attractive. They want to buy it at low prices and ride it back to 100. So that Sharpe ratio becomes 8% divided by 2% or 1.5% or 1.8%. And it becomes a Sharpe ratio of 4 or 5. And these become really, really attractive Sharpe ratio metrics, which are typically not seen in other assets because the volatility is usually very high or the returns are very, very low if the volatility is low. And the more beautiful thing is it's a high Sharpe ratio in a very liquid instrument. It trades $200 million a day on average on the NASDAQ stock exchange. Otherwise, when instruments have high Sharpe ratios, like 2 Sharpe ratio, 3 Sharpe ratio, they're still usually very illiquid or they don't even trade necessarily on the market. And they have like, it's a portfolio or a fund where you can redeem partially on certain dates. So creating high Sharpe ratio with high liquidity is like the ultimate achievement in financial markets. And it's only possible because of Bitcoin and because of strategy having so much Bitcoin and having such a liquid stock in MSTR as well, because MSTR and MSTR's liquidity supports the liquidity of STRC and the creditworthiness of STRC. So it took a while to get this engine going, but now we've reached this point and now it'll just keep, continuing as is. We don't really need to change much. It'll just keep expanding.
En España, hasta hace muy poco, casi nadie pensaba que una empresa cotizada pudiera dar un giro de 180 grados y centrar su estrategia en Bitcoin. Pero Bitcoin no es solo un activo para unos pocos. Es un activo abierto, global y cada vez más relevante para todos. Desde el mundo institucional también toca empujar, no solo en Estados Unidos, también en Europa, también en España. En Vanadi decidieron cambiar el rumbo. Hoy cuentan con 193 bitcoins en tesorería y tienen aprobada una capacidad de inversión de hasta 1.000 millones de euros para seguir construyendo una tesorería pensada para el largo plazo.
Yeah, we've seen some Sharpe ratios that were better than 5, but it was in private credit and private equity that only gets like a mark to market maybe every 5 years. So yeah, it's not the same. And sometimes when it gets mark to market, it's marked at 0. So it's not.
Now, I just wanted to ask, on this, because you reached that point after 5 years, passing through many experiments. You started with the convertible bonds, then you had those preferreds. Now Stretch is doing this marvelous thing. So is it possible for each Bitcoin treasury company in the world, or what would be like the characteristics that they need to fulfill in order to get to this point? Because we are having a lot of different Bitcoin treasury companies here in Europe. There are 2 only two here in Spain. They started as you. They are just following up your playbook. They start with convertible bonds. They are just accumulating debt just to buy Bitcoin. They are living there here. But at what point of the time or what characteristic that they need to fulfill? What must happen for them to be able to issue those preferreds and then to get to those levels of the volatility and the Sharpe radio? What would be your small guidelines, yes, for them?
Yeah, I think it's tough to give very specific numbers, but what we've seen in the market with other treasury companies and our conversations with them and our conversations with our banks that help us with the launch of these instruments is that maybe having a size of $500 million to $1 billion, probably $1 billion of Bitcoin holdings is maybe the right scale at which it becomes reasonable and attractive to then launch a preferred instrument. Because unless you have that big scale of $1 billion, you can't go out and issue 100, 200, $300 million of your preferred equity instrument. And unless there's a decent critical mass or critical scale of your preferred, a bank won't necessarily want to underwrite the deal, take it to the market through an IPO. Institutional investors might not be attracted to it because they'll think it'll be very small, very illiquid. It'll be difficult for them to exit when they want to. So it's important to reach a certain scale. And then after you reach $1 billion in scale, maybe it becomes easier to launch them. But one unique thing is all these Bitcoin treasury companies that have been following Strategy's lead don't necessarily need to replicate the exact model, which is issue their own preferreds backed by their own Bitcoin. It is a good model and they should try to do it. But another unique thing is they can actually take STRC itself, repackage it, and launch it into their local market. So if you are a Bitcoin treasury company in Spain and you only have $50 million of Bitcoin reserves right now or $100 million and you're building your scale with time, you can try different kinds of leverage that have more risk than preferred equity. You want to build that scale up, reach to the point you can do preferred equity. But in the meantime, you can almost start a new operating line of sorts or a new business line, which is you issue something in your local currency in Spain, which is a preferred equity instrument, which doesn't pass through the entire 11.5% of STRC, but passes through 10% or 9% or 8% and is backed by STRC instead of being backed by Bitcoin. And then you can grow that slowly with time. And that becomes a very interesting business model where the scale is not prohibiting you anymore. You can go in with a small scale on day one as well and keep growing it. And people will know that the underlying liquidity of STRC itself is supporting it. Okay. So it's a unique way of growing. And then maybe with time you launch your own preferred. But that's where at least my mind is at these days based on some conversations in the market.
Yeah.
It's interesting there because I don't know if you agree, but one of the things that made STRC behave much better, because initially, as you mentioned, it wasn't working that well in terms of volatility. It took a while for it to really settle. And one of the things that changed, well, two things changed. Time, which of course always helps, but also the USD reserve. So if this is actually something that is important for a preferred like this one to work, it will make much more sense, I guess, instead of having a USD reserve, to have like a Stripe, a STRC reserve. In this case, I mean, it's you're having a cash reserve, but that pays you 11%. So that's more interesting, I guess, no?
Yeah, I agree. And the USD reserve, cash reserve, is very important to give that comfort and confidence to investors. And the other thing that happened also is we increased the dividend rate in those 7-8 months. We started at 9%. And then month on month, we kept increasing the rate. And now we reached 11.5%. And I think now we've hit the sweet spot where the rate is attractive enough for investors to take this new form of risk, which they've not seen before, not understood before. And now the capital is pouring in. And you're right. Like if another company wants to follow this model, then they need the scale. They need to keep some cash on hand. Then they need to launch this. They need to get the trust of investors, build a track record. Or they can take STRC, repackage it, sell it, and then they don't need their own cash reserve. Then they don't need the long track record and they can build from there. So STRC itself is acting like the raw material that people can take, and the raw financial instrument people can take and repackage it into different things. People are doing it in the crypto world, launching crypto tokens backed by Stretch on Solana, on Ethereum, and all of this DeFi stuff is happening. People are launching ETFs. One recently launched in Europe by 21 shares. And now I think treasury companies will do something similar.
Yeah, I think that is the key point, because that is also like working in expanding the Bitcoin ecosystem for people or institutions that maybe they cannot, tolerate volatility of the MSTR or Bitcoin itself. And I think Sailor is in a unique position in the world, like you say. Their instruments are pristine, and I think they will be used as collateral for others to make that trade. And maybe most of the people or investors don't even know from where, this is backed up by what? STRC, and that's Bitcoin. What is that? No, I think that in the future, people will use it without knowing.
I think you're exactly right. And Michael Saylor uses some really interesting analogies where it's like, if you have a nuclear reactor in your country and that's powering electricity for you and you're getting really cheap electricity, do you care about how the nuclear reactor works? And do you
Yeah.
understand the engineering and the science and technology behind it? You don't care. You just want the cheap electricity. And the same thing will happen here. People will take STRC, and really smart entrepreneurs and really smart financial companies will create something like a digital money on top of STRC, which is a stable currency pegged instrument, like a stable coin almost, in the local currency of your jurisdiction that still pays a yield of 5% or 7% or 10% and is backed by STRC. And that will be like high powered money that you can use for daily transactions and earn a yield on it, like a bank account which is not paying you lower than the inflation, but it's paying you higher than the inflation rate. And then when you have that, your parents and your family friends and your cousins will just use that. They won't care about how STRC's dividend rate mechanism works, or what the ratio is, or what the coverage is, or how Bitcoin works. They just want money that is high performance and high velocity, and that will be the killer application of Bitcoin. And right now Bitcoin struggles with that because people can't wait 5 years to get rich suddenly on one day. They can't handle the volatility, they can't take the risk, and they can't spend 100 hours understanding Bitcoin. It's just so difficult. And I've tried and failed for 5 years with so many people, and now when I discuss STRC with them, like suddenly the first question they ask is, oh, so how do I buy it, and like where do I go? And it's just a very different level of understanding you need, because the value proposition is just so much stronger for so many people. So I think it's going to be a game changer for Bitcoin overall. It's going to suck in a lot more capital into Bitcoin and will benefit the whole Bitcoin ecosystem massively.
Yeah,
And we already
absolutely.
see it. We saw Stripe that is already, they issued SATA, but now they say, do we issue other preferred or we just buy your stretch? And they're just buying your stretch. So this is like a shortcut. Why do more experiments if we already have something that works? Also, Roxum, I don't know whether you saw it. They are like offering your stretch, like first offering the money to buy your stretch. So they are making the yield on the lending side of the cash that is later on served as the capital to buy more stretch. So I think there's going to be like as you say, whole economy around it that will not even ask anymore, oh, how is it working? Why is it working anymore?
Yeah, you're exactly right. Like we saw that with Bitcoin and with MSTR, like markets got built on top of Bitcoin, obviously for 15 years, and then on top of MSTR for 5 years. And now like these different instruments and markets will get built on top of STRC. And I think that will be even bigger and better than what's being built on top of MSTR. And what Roxum is doing is super fascinating as well. Just a Bitcoin denominated exchange. And the idea that you can invest in STRC and collect your dividends in Bitcoin, or you can invest in STRC and borrow against it and buy more STRC and like have a leveraged STRC portfolio. And obviously there are different risks that come with everything, and everyone should like assess the risk. But I think it's a beautiful example of how smart entrepreneurs globally will keep taking STRC and will do like really interesting things with it.
Okay, let me ask the limits question because so I've made a lot of videos about this thing, and So in the last one, I was just amazed at the thing working so well, because the more you look at it, the more difficult it is to find holes in the whole thing. It's too good. It's like, okay, I don't see how this cannot just accumulate hundreds of billions. So it's like but on the other hand, I'm like, okay, there must be a limit to it. So this is how I see it, and correct me please if I'm wrong. But when you were just doing MSTR to raise funding, you had to raise, well, you could raise X amount of money, but with STRC you can raise at least 10x, assuming that you're paying 10% dividends. So you're paying 10% dividends, you can do 10x what you were doing with MSTR, because with MSTR you just raise to pay the dividend, and since the dividend is 10%, you can do this 10 times more. So that's already huge. And we don't know how much you could do with MSTR. So we don't know the limit. We just know that the limit is now 10 times more, 10 times larger. But what is the limit because of course you need to raise money for the MSTR. You need to keep some USD reserve just to keep people chill, and you also have to take care of the 11%, which I believe that the goal at some point is to lower that rate. As the market feels more relaxed with it, they could probably get get lower interest and still be happy with it. But yeah, how do you look at this? Because I'm struggling to see a problem in it, and the only thing is there must be a limit somewhere.
Yeah, I think that's a great question. And the scenario you're painting is that STRC is so attractive and is so great that so much capital will pour into it because of that 11% or 10% dividend rate, stable, tax deferred. And strategy will take in all that capital, and we'll obviously buy Bitcoin with it immediately. But for some reason, all that capital going into Bitcoin is not moving the price of Bitcoin up for other reasons in the market, and Bitcoin price, let's say, stays low. And because Bitcoin price is staying low, MSTR is not trading well, or is not going up in price a lot, and it's not looking attractive as an instrument. And I think it's not a very realistic scenario, and the probability is low, because if all that capital flows into Bitcoin, we will end up driving the price of Bitcoin up by making Stretch a big success. And if the price of Bitcoin goes up, then the capacity to issue Stretch also keeps increasing, because the size of a balance sheet keeps growing. And as Bitcoin price goes up and outperforms this 10-11%, then MSTR gets to keep that extra performance. And MSTR starts looking very attractive, and MSTR starts outperforming Bitcoin. So a lot of new capital then chases MSTR as well, and we can issue new MSTR stock that again provides more of a base for STRC to expand into. So as STRC grows, Bitcoin grows, MSTR becomes attractive, we issue more MSTR, again Bitcoin grows, the capacity to issue STRC keeps increasing, and we issue more STRC, Bitcoin grows. It becomes very reflexive, like a flywheel. Everything keeps spinning up together, everything keeps growing. But still to your question, in theory, if Bitcoin is not growing, STRC in size is continuously growing, then, and we need to, pay the dividends, maintain the USD cash reserve, and not have very high amplification levels, because then the equity buffer becomes too thin. You don't want STRC to be like 99% of all the Bitcoin on your balance sheet, or 80% or 70%. You want to keep it like 30, 40, 50%. So if like we have $50 billion of Bitcoin, that let's say goes to $100 billion of Bitcoin, we want to keep STRC and all the other converts and the prefs at like $30 billion, $40 billion, 30, 40%. So we can remove the converts early. If everything is such a big success, we can just get rid of the converts early, equitize them early. We can issue some of the other preferreds if they're valued fairly, that are junior to STRC, and maybe keep STRC at the right level. But we can as the last resort, maybe consider lowering the rate of STRC and making it less attractive and slowing down the demand. So right now we don't want to lower the rate of STRC because we want to suck in more capital. We want to keep it attractive. But if we get too much capital and Bitcoin is not going up and MSTR issuance is struggling, then we can start lowering the rate and balancing the flows and balancing the rate and balancing the price. But I don't think it's going to happen. I think what will happen is we'll keep the rate high, we'll keep sucking in capital, and we'll keep growing, and we'll end up growing very, very quickly. I think we grew fast for the first 5 years. It's insane that the more capital we raise, the more capital we can raise. Like the velocity is not velocity is like accelerating. So it's it breaks like most business models or most like financial concepts, because people think as you grow in scale, it becomes tougher to grow further. But it's like the opposite over here. It's just like spinning faster and faster.
Yeah. No, it's a great point. Sorry, I was smiling because I was thinking that this already makes for another video I could make. Because I mean, you said something that is really mind bending. Because when I was looking at STRC, and I've looked at it many times, I was like, well, at some point, of course, they need to lower the rate of return, no, the interest. But what you're saying is that you come at this from a different perspective as the other people go to raise money. So the other people go to raise money and they want to get, of course, the cheaper money they can. But in your case, it's not the cheaper money that you want, is the largest amount of money that you want. And of course, in a way of thinking, then paying more makes more sense because you get more money and you can pay this interest. Yeah. Okay. Thanks. That's interesting.
That's exactly right. And it's because we believe Bitcoin is appreciating 20, 30, 40% in the future, 2 to 3x the performance of typical equity markets. And that's why we can offer the 11%, which is great for the investor. It's like so much better than other instruments. And it's great for us because we can raise more and more. And because our base case on Bitcoin is so high. If Bitcoin was a terrible asset, then we can't do any of this. But Bitcoin is the best asset. That's why all of this is possible.
I think we all agree here.
Yeah.
You don't have to go, Victor.
Following with that line of thought, I think if STRC continues to succeed and strategy accumulates 1 million Bitcoins, let's say this year, I think it will be a point where investors will say, oh my God, there is not enough Bitcoin. I think we are all waiting for that. And actually, when BTC moves higher, you force another actors to buy it. So it will increase the price exponentially in some point when we finish, I think, this bear market where I think strategy is very plausible to think that they will buy 1 million coins this year maybe, or accumulate 1 million coins. I think you all agree with me that it's going to be a click moment in the market, in the investors' minds.
Yeah, I think it's realistic. We buy 1 million Bitcoin, and I think what will happen is, for us to buy all of this, we obviously have to take it out of the hands of existing holders, because the new supply of Bitcoin is, not that much. And we are already buying 3 to 4 times the supply of new Bitcoin through STRC. That's what we've done in the last month. So as we take Bitcoin off the hands of other investors and the crypto OGs who bought 10 years ago, we end up driving the price of Bitcoin up. So if we end up reaching 1 million Bitcoin, 5% of the overall supply roughly of Bitcoin, the price of Bitcoin naturally will be shooting up from 70K to, let's say, 200K to 500K. And that will benefit every Bitcoin investor, and new investors will pay a lot more attention to Bitcoin because of the outperformance of Bitcoin relative to everything else. So then they'll chase Bitcoin and they'll chase MSTR and STRC. Like, new capital will pay attention and come into the ecosystem. And then we won't stop there. We'll go from 1 million to 1.5 million. And that will take the price of Bitcoin from 500K to 5 million per coin. And that will be great. And then we'll go from 1.5 million Bitcoin, or 7.5% of the supply, to 2 million Bitcoin, 10% of the supply, maybe in 10 years. And we will drive the price from $5 million per coin to $50 million per coin. And we'll keep grinding up and up and up. We won't slow down. And we'll keep driving the price of Bitcoin up. And, it's going to benefit everyone, and it's going to keep attracting new capital in. And we'll be good stewards of that capital. And the whole ecosystem will benefit.
And you have like a models inside the company that, project that scenario, what will happen, what can happen when you reach that levels?
We have a lot of models, and a lot of them focus on this, base case and upside. A lot of them focus on the downside also. Risk management becomes more important sometimes than the 3-year, 5-year vision of like where we could go. It also becomes so difficult to model these things because the pace of capital raising can change so quickly. And Michael himself says, right, like, all your models are broken. So we have some models, and I think, but it just becomes difficult to predict the price of Bitcoin 5 years from now or 7 years from now, and how much can we capture. But the funny thing is, like, all we need to do is just manage the risk correctly and grow STRC and MSTR correctly and custody the Bitcoin safely. And then we don't really need to model what happens 5 years later and what we do 5 years later, because we'll just do the same thing 5 years later as well. We'll just keep growing STRC, MSTR, and custodying the Bitcoin. So we have some models, but I wouldn't say any of them are like very precise or very scientific or very meaningful. The important models are more on risk management. How much USD reserve we need in the short term and how much might we raise in the next 6 months, and just more like risk management and the downside.
Talking about the price, I need to ask this question because everyone is asking about it and there is a lot of noise around it, and I want you to clarify whether you agree or don't. There are some rumors that the Bitcoin price is being more and more manipulated by the people that are shorting it, because there are more and more financial institutions like playing with this instrument as if it were any other instrument. So there are a lot of shorts. Everyone is saying that the price is like stuck between up and down for a while now because of those manipulations. What's your take on it? Because I don't think whether I do agree, because most of Bitcoin is still in hands of retail. It's not in hands of institutions. Do you think it does have any impact on the price, apart of all the macroeconomic geopolitical situation that we have now? That was always there because there was always something going on in the world that is impacting Bitcoin, and Bitcoin is always like behaving a little bit like any tech equity. But do you think there is any impact, and this can impact your prediction on this very sharp growth of the price in the future? Do you think we're really in this situation where more and more institutional companies are entering the market, let's say manipulating the price, can allow us to reach those levels of 1 million, 5 million, 10 million, or whatever?
It's a great question. And I personally think you cannot manipulate the price of Bitcoin because you can't manipulate Bitcoin in cold storage or Bitcoin in controlled by a private key. And as long as there's demand for Bitcoin in cold storage from retail actors and institutional actors, the price of Bitcoin will go up because you'll be taking it off the hands of other people that hold it in cold storage, and they'll only get rid of it at the clearing price that they demand, at how much they value Bitcoin. So that's my number one point. You can't fundamentally manipulate Bitcoin because you fundamentally cannot manipulate Bitcoin in cold storage. And as long as demand of Bitcoin in cold storage is rising, which is what we do as well, we hold the Bitcoin in cold storage with our custodians and we very closely monitor that, then you can't manipulate it. But I will agree that as the natural financialization of the asset happens, and as Bitcoin wrappers like IBIT become more successful, which is great for the asset class because it's bringing in more capital, it also creates some of these interesting dynamics in the market where, let's say, I hold one Bitcoin through IBIT and you want to short Bitcoin. You borrow my IBIT from me and you pay me some, small interest, and you short it into the market. And let's say Alberto wants to buy Bitcoin and he buys IBIT and he buys the IBIT that you were shorting. Both him and I are expressing our long view on Bitcoin, and you are expressing your short view on Bitcoin. And the total Bitcoin that is held in cold storage is 1. And I guess it makes sense because the net long minus short is like 1. So it kind of makes sense. So I just think that will happen. Like, you'll be able to short Bitcoin through these securitized wrappers of Bitcoin like IBIT. Options already exist on Bitcoin. Perpetuals on offshore exchanges always existed on Bitcoin. Now that will come onshore, and derivatives and the volume of these derivatives onshore in trusted regulated exchanges will keep going up. It'll make the entire asset class more liquid. But I don't think it meaningfully hampers the price potential of Bitcoin, because the price potential of Bitcoin is driven by the desire of having Bitcoin without counterparty risk, or having an asset without counterparty risk. And that is a perpetually growing adoption that will never slow down, and that will just be a protocol that keeps expanding. And I don't think there's no reason why Bitcoin will not be $50 million per coin, like 10, 20, 50, 100 years from now, however long that takes.
Yeah, and there is a news that I think it can help to that, because I was reading that JP Morgan activates BTC as institutional collateral. I remember Saylor saying that is one of the main reasons that is why not going so up because people have to sell it. But right now,
correct.
that is the point.
So that's the way he describes it. The number one catalyst maybe for Bitcoin, if you care about a catalyst in the next 12 months, might be the big banks adopting Bitcoin. And if you can go to JP Morgan or Morgan Stanley and you trust them because they're 100, 200-year-old institutions and they will let you borrow against your Bitcoin, then it becomes so much more easier to fund your lifestyle and fund your expenses without selling the Bitcoin. And that has not been unlocked yet. And once that gets unlocked, and once regulated financial institutions lend against your Bitcoin and custody your Bitcoin for you, you will see a lot more actors come into the market because they don't trust crypto exchanges and they don't trust offshore exchanges. And you won't be able to change their mindset, but they will trust JP Morgan, they will trust Morgan Stanley for good or for bad. And that will lead to an explosion in demand. And it will lead to something like maybe, it'll just be a short squeeze on Bitcoin in some sense.
Also, the interest rate that these exchanges charge is much higher than what probably JP Morgan would do. But I just have one last question from my side, from my end, and that is that you mentioned before that of course the only thing you need to do to keep this working for the foreseeable future is to manage the risks. Which ones? The top two of risks that you have in mind when you are looking at, okay, let's make this work the next 6 months.
So next 6 months in terms of risk, we hard to identify one, but obviously I think there are risks.
If I should too.
The risk is that we for some reason don't fund the dividends. And Bitcoin crashes massively, so it's becoming tough to raise through MSTR, the common stock, new capital to fund the dividends. And I think that risk is mitigated by the fact that we have the dollar reserve. So even if Bitcoin crashes for 6 months, 12 months, 18 months, we have cash on hand to keep funding the dividends. So that risk is kind of taken care of. The more existential risk is not just for 6 months, but even in the future, that we don't manage the custody of a Bitcoin well. And we currently are obviously relying on third-party custodians that we trust and that are regulated and have their own auditors. We have our auditors. We pay very close attention to it, and we monitor the holdings all the time, 24/7. So you don't want to lose the Bitcoin, obviously, and that's true for risk for an individual and a corporate and an institution. So I would say that becomes the only existential risk, that something happens with the Bitcoin itself, because Bitcoin price is not crashing and going to zero. And even if it goes down 80-90%, we can survive. Nothing happens over there. And we should not do something stupid and issue more senior debt than STRC. We should not issue something that destroys the credit worthiness of STRC. We should not suddenly lower the rate when we're not supposed to. We should not do stupid things and create fear and anxiety. We should not get distracted by 100 other exciting things happening in Bitcoin. So focus and custody are like the important things.
Would you say, sorry, David, one sec. Sorry, one sec.
Yeah.
Would you say that is a risk? I didn't have this question, but since you said that, would you say there is a risk in, I don't know, it's a bit crazy, but let's just, for the sake of thought, like Berkshire Hathaway, they have like 300 billion in cash. If, and it's a big if, a company of this size decided to do strategy and do the same thing, just buy Bitcoin with it and do the same thing, this could be a risk for a strategy, because if they did this with 300 billion, they could probably get to the same size as you in terms of Bitcoin and do the same thing, and then you will be competing with somebody else doing the same thing, and then you will have to chase higher dividends and stuff like that. What do you think?
I think if Berkshire Hathaway puts $300 billion of capital into Bitcoin, they end up driving the price of Bitcoin up from 100K to 500K, and sentiment in Bitcoin improves so much that our stocks start performing really well, and MSTR and STRC become really attractive, and we raise another $100-200 billion, and we end up buying a lot more Bitcoin. So even if a lot of capital flows in from Berkshire, it just supports us more and it gives us more velocity in our capital raising, and we still end up being the largest and number one. I think it's practically impossible for anyone to catch up to strategy right now, at least another corporation, I think the only person that can actually catch up is maybe the US government. When they decide to implement a Bitcoin Treasury reserve and they are willing to fund it with the issuance of bonds that they control, and they are not, constrained by budget neutral. That's what right now the focus is, that it'll be budget neutral. But if it stops being budget neutral, and if that passes into law 5 years, 10 years from now, and they issue $500 billion of US T-bills to buy Bitcoin, then maybe they can, catch up to strategy and hold a lot more than strategy. But I think it's impossible for Berkshire or any other corporate to catch us now. Maybe they could 3 years ago or 4 years ago. It's not going to happen anymore. But sorry, David, I know you were asking something as well.
Oh yeah, talking about risk, there is a human side on all of this, and is Michael. And I hope he's perfectly well. But what happens if he dies, for example?
I think, yeah, it's a valid concern. And, the key man risk exists for a lot of companies, but not so much a strategy, because the the business model is so simple and elegant that as long as you don't do the wrong thing, this works perfectly well. That's number one. But number two, and more important, is that it's not just Michael who runs the show even today. And our CEO, Fong Lee, and our CFO, Andrew Kang, are really important and instrumental in making the strategic decisions, speaking with investors and gaining their trust, and executing the actual strategy and doing the day to day operational work, which Michael doesn't do. And without them, it doesn't work currently either. And to remove that fear from the minds of people that it's only one person running the whole show, strategy is Sailor, Sailor is strategy, is why Fong and Andrew are now there in the public sphere a lot more, doing a lot more podcasts, TV interviews, conference presentations, investor roadshows, to gain the trust and faith of every investor, and to make them realize that it's not a one man show, and that, God forbid anything happens to Michael or he decides to, change his mind on running strategy, which I don't think he's ever going to stop doing. Um, that they can still, carry on. And the simplicity and the elegance of the business model makes it even easier, because as long as you don't screw up and you don't do the wrong thing, this just continues as is. It just keeps scaling up, and you just need to, like, do no harm. Don't destroy what's working perfectly well.
Yeah. Looking at the future, and to wrap up, it seems you already found this Saint Graal. You've got Stretch, works perfectly. Even for Europe, you prepared like a special version, European version that is not USD dominated, which is Euro dominated. For now, I think it's only for institutions, yes. But my question is, for the future, are you going to still try to find another instrument? Are you looking for something else? Are you working on another financial engineering over Bitcoin? Or you're like at the point that, okay, it works, so just focus on improving what works?
It works, so we focus on improving what works, and we give the opportunity to other players to come in, take what works for us, and create something that works for their audience and their investors. So we don't want to necessarily create a replica of STRC that's euro denominated and launch it in Europe, because we don't have the relationship with the regulators in Europe and we don't understand the markets as deeply. But European investors and European financial companies do. So they can create that by backing it with STRC. And that will happen in South America, in Asia, in Canada. And we don't want to do that and distract ourselves and lose focus. So we'll keep growing STRC, and we'll keep creating the opportunity for others to take STRC and do their own thing, and focus and concentrate the liquidity into one instrument. Because if you create 10 different instruments, the liquidity gets fragmented across them. 100 million trading here, 10 million trading here, 5 million trading there, 500 million. No, STRC should trade $1 billion a day, and it should benefit from all of these different instruments in different countries built by other people. That is like a layer three in some sense. And we focus on our digital credit layer. And that's, we're just going to keep doing that and keep doing it correctly.
Wonderful. Thank you so much, CJ. Thank you, David. Thank you, Alberto. I hope to see you all in Madrid. Of course, Alberto has already confirmed. He has no other option. He must be there. But CJ, my invitation is still valid. So if you can make it, it will be just wonderful. You know, a Spanish audience is like very willing to get to know you. Everyone wants to understand it better. And if they can make it from the first hand hearing, you know, from the person that is like very close to all this design, it will be just wonderful. Thank you so much for your time, David. Thank you, Alberto. Thank you, and we'll release it very soon, and hope to see you all in Madrid.
Thank you so much for having me, Aldona and David and Alberto. I think this is one of the most enjoyable podcasts I've ever recorded. So thank you for that. Thank you for the questions. And
I
I've
was
never been to
prepared.
Spain. Yeah, you were very well prepared. I've never been to Spain, but would love to. And I'm excited to take you up on that offer and hopefully be there at the conference. So hope to see you in person sometime soon. But thank you so much for having me. I really loved it.
Wonderful. Wonderful. Thank you
Thank
so
you.
much, guys.
Thank
Thank
you.
you.